Hey, I'm McDonald, your real estate agent here with Real Property Associates, and today I want to talk about appraisal contingencies and what happens if your appraisal comes in below value or comes in low. The topic of this video, contingencies in general, will probably become a new series here in the near future, so you can keep on the lookout for that. But today I want to focus specifically on appraisals, and I'll start by defining an appraisal. An appraisal is simply an unbiased professional opinion on the fair market value of a house. And typically an appraisal is carried out by a third party, an appraisal company. In a purchase and sale transaction, they're going to be not party to the transaction, and their job is to represent the bank, or not represent the bank, but to provide the bank with their professional opinion on the value of the house. Now, in a contract, when you have an appraisal contingency, what you're saying is that the sale of the house in this agreement, the contract, is subject to an appraisal at either the purchase price or above the purchase price. If the appraisal comes in below the purchase price, that's where we start to run into trouble and have a little fun. So I do want to jump into this because this is the question that I get asked a lot by buyers, and this happens up front. And specifically when we start talking about appraisals even more and it becomes more of a reality, they want to know, well, what happens? So what happens if your appraisal comes in low and is a little different depending on your situation in the contract, but generally speaking, if you have a financing contingency or an appraisal contingency, and a lot of times those are the same. Typically the appraisal contingency is part of your financing contingency, but if it's not and you just have an appraisal contingency by itself, then you would follow these steps essentially. So what happens is you would get notice from the lender that the appraisal came in below the market value, or below the purchase price, excuse me. And what we're going for is at value, which means at or above. But when they tell you, bummer, it came in low. Okay, so what happens here is you send a notice to the seller that says the appraisal came in below value. And the seller then has the opportunity to respond in one of three ways. The first way is to get a reappraisal or reconsideration of value. So they can hire the same company to come out and do another appraisal. Typically they don't want that. What they'll do is they'll get another appraiser out to appraise the property and give their opinion on value. If that comes in at or above the purchase price, then we move forward. The transaction continues as it was supposed to before. The other option the seller has is to drop the price. So they can either meet or beat the appraised price. So they need to at least come down to the value that the appraiser suggests. And if they want to, they can go a little lower, but come on, let's be real. The seller's not usually that generous. So typically they'll just drop the price down to that appraised value. Now, the third option the seller has is to say, take it or leave it. They can just reject the buyer's notice. They can say, you know what? We're not going to drop the price. A lot of times in Seattle, there were 5 offers, there were 6 offers. Too bad. If you want to buy the house, then you need to make up the difference on the price. And that's what happens if the seller says, take it or leave it. Now, in that case, the buyer can either make up the difference on the price, so the difference between the purchase price value and the appraised value, they need to pay that difference in cash, or they can restructure their loan so that it still makes sense and they can still make the purchase. A lot of times that's what people do rather than actually adding extra cash into the transaction, maybe just a lower down payment. The other option the buyer would have at that point would be to say, you know what, I don't want to purchase this property anymore and I'd like to walk away. And in that case, they'd be able to retain their earnest money and back out of the transaction gracefully. The situation's a little different if you're a buyer in Seattle right now and you don't have an appraisal contingency, and this is actually more common than you might think. A lot of times buyers, and this is my clients as well, will get their loan pre-underwritten and they will know going into it that they're pretty sure they're going to get their financing. So if they a lot of times don't include financing contingencies, but sometimes they don't even include an appraisal contingency. And in this case, they would be on the hook. So if you got to know that going into it, right? Before you make your offer, you got to know this could happen, this could be a potential issue, and you go into it knowing that. But if the appraisal comes in low, you would be responsible to make up the difference. Or restructure your loan. As the buyer, though, you would take responsibility for that. If you can't make up the difference, or you don't want to, you got to walk away. The sale is going to terminate, and you would be liable to forfeit your earnest money to the seller. So that's the risk. And people ask me, well, what's the risk? You know, what's my risk? And it's typically just the earnest money as the damage is. So the interesting piece is if there are, you know, competitive situations, you can structure your offers so that you have a contingency, but also offer to make up some of that difference we were talking about, or restructure your loan if it comes in a little lower, and kind of hedge your risk a little bit. But typically you're either going to have an appraisal contingency as part of your financing contingency, or separate, or you're not going to have one at all. So I hope this video was helpful and educational for you. If you did find value in it, please comment down below. I'd love to hear your thoughts. And if this video provided value for you, please subscribe to my channel. And I'd love to continue to provide content for you here in the near future. We'll talk soon. Bye for now.